here in Busselton who travelled down to spend a couple of days? Anyone? Or you're not admitting it? No? Okay, fantastic. It was a wonderful night. We went out to the shelter. I know a couple of you went out to the fire station. And this evening we're looking forward to sharing a few drinks at the end of the day and analysing what it is that we hear and we've still got a day to go after that. So 3 days. And I was reading some of the press on the conference last night before I went to bed, and lots of really positive things being said about it. So we're really, really glad. And I think it's, as Stewie and the team said, it was so well received last year that we did have to expand it for this year. So who knows where this conference is going to go in the future. And are there any of you that didn't attend yesterday, who didn't get down yesterday? Can I have a show of hands? Anyone at all? A couple of you. So we were talking at the start of yesterday because we had the guys from Canaccord here, who are our major sponsor, and we've got one of our young Canaccord guides coming up in a moment. Well, he likes to think he's young, to address us. But we were going to have the CEO come over yesterday, and he's in Melbourne. And I don't know, one of the things that we were selling this conference to people on the East Coast was you can jump on a plane, you can come from Melbourne straight to Busselton, and all the flights were sold out for this week to get here from Melbourne to Busselton. So we obviously did a good job. Oh, Jackson, did you want to have a chat, did you, to everyone first?
Morning, everyone. Just let you know that we've got the Mayor of Busselton, Grant Henley, who's just decided to pop down and have a look. And
is he investing?
He's going to throw a lot of support behind this conference, and we're just going to keep growing it. So thanks to Grant for making an effort to come down to the Southwest Connect.
Well done. Thanks, Jackson. Did you want to have a little bit of a speech, Mayor? I know mayors like to do that, and I'd hate to rob you of that opportunity. Oh, dear. Good. Take this one. This is a great, powerful microphone. You should use it.
I need it. I've only got a very small voice. I'd like to welcome everyone, and sorry I wasn't here yesterday for the start. And Chrissy, I think you've been down here before with Destination WA in the region. We've certainly seen your face around. Can I begin, and I'm sure you did yesterday, but acknowledging country, the Wardandi people, as traditional custodians of the land on which we live and operate. Welcome to you all down here, and Canaccord especially as the sponsor of this event, a long-standing tenant in the city of Busselton with a presence here, and some of our self-funded retirees down here looking to increase their net wealth, which is fantastic. And I've looked at the program. It looks hectic. I've also got mayors and CEOs from all of the regional cities, many of them involved in obviously resources coming down that I'm hosting today. So hopefully some of them can get along as well. But I'd like to officially welcome you all to the City of Busselton. We're certainly hoping to grow our conference, convention and events with our new Performing Arts Centre, as you may have wandered through the town centre. The new hotel and other construction on our foreshore, but we really want to grasp the opportunity to bring people into this beautiful region and do some great business. So welcome, have a busy day, and hopefully a fruitful conference, and we welcome you all. Thank you.
Thank you very much. And he's right, I used to be with Destination WA, which is a little travel program that I worked for the last 8 years or so. Busselton's always a highlight. But I think ever since I've been this high, Busselton's been a highlight, especially that bakery and those vanilla slices. Why don't we have those, Stewie, at morning tea? They'd be a pretty good, yeah. But we want vanilla slices, don't we, with our sausage rolls? We'll stick them on there for next year. We have a wonderful mix. I know Mayor mentioned self-funded retirees, but we are a wonderful eclectic bunch here of human beings that do want to just grow our wealth. And I would just like to acknowledge the fabulous Heather Zampatti, who is in the audience. You stick your hand up, Heather. So this lady she's an amazing human being, but she's also a wealth of financial knowledge, and a woman who gave me a job maybe 22 years ago. We worked first together at conferences, empowering women to take control of their future, and she's done a great job at that, but just in life in general. So great to see you here. It made me really smile when I saw your face. So now I had lots of very wise and intellectual things to say to start off the conference today, and then I started speaking to our first group of presenters, and strangely they all had a connection to one another. So I'm going to invite the first bloke up here, And you can watch our first, 3 or 4 people and try and see if you can work out what the connection it is that they have besides wanting to help you make money today. So one of the other things to think as Paul comes up here today, so this is Paul Howard, everyone. He's a senior mining analyst with Canaccord and of course, who is our major sponsor. When you drove here today, if you had to drive, it cost you 60% more to get here in petrol. No, I purposefully bought our smaller car rather than our great big 4-wheel drive because I thought, bugger this, I'm not spending $150 to come down and go back. So I took the little miser for the petrol reasons. And when you think about that in terms of mining, so the mining companies 12 months ago, has that increased all of their costs by 60% as well? Well, this is the fellow that's going to share his insider knowledge of mining analysis with us. Would you please make Paul welcome and think again about what could be the link with our presenters this morning? Please make him welcome, everyone.
Thanks very much, Chrissy. Delighted to be here for the second year presenting to you guys. Canaccord is delighted to be the major sponsor of Southwest Connect, and thank you to Vertical Events for putting this event on again. Disclaimers, can we get this up on the screen here, guys? Disclaimers, you're going to see a number of disclaimers over the next couple of days. We also have disclaimers. I hope the data I present is somewhat accurate. Yeah, we'll kick off. Just wanted to highlight, Canaccord continues to rank #1 in the metals and mining ECM space. This is the Australian league table year to date. You'll see at the top, Canaccord leading the charge. Market share, 23% of all the deals are done by Canaccord. But I really wanted to highlight 106 deals. I'm extremely proud to work with such a hardworking bunch of people at Canaccord. 106 deals, delivering ECM to the ASX. Outstanding achievement, and just wanted to, doff my cap to my colleagues who work extremely hard. Chrissy touched on it. There's been a lot of focus on costs this year. Those phrases I have up there have been thrown around quite a lot within the resources sector, and I just thought it'd be pretty interesting just to highlight some of the where we see costs going in the sector. But before we sort of look at the costs, we must see, well, where does all the cash come from? I touched on ECM. Just wanted to highlight over the last 10 years, there's been over 3,500 ASX deals in the ECM space. So that's equity, that's capital raises. That's raised $53 billion across all the brokers in the last 10 years. The total numbers of deals are growing. I think that's really reflecting in a demerger in the sector. We used to have big, large, BHP, WMC, Rio type companies, and now we're seeing more specialized explorers and a bit of a demerger as companies focus more on their niche, I suppose. Obviously, the average size of these deals, 14 million, is the average size, and that's increasing over time. I think it's just getting more expensive to explore, which is typically where a lot of these equity raises come. It's just getting more expensive to explore, but also we're in more diverse regions, and so logistics play a little bit more of a part in our costs. But what's driving the need for equity raises at any given point? I think it comes down to a few things: necessity, market conditions, and commodity cycles. Necessity, companies just need to remain funded, and it just gets to a point in time where they need to rattle the tin and raise some cash. But market conditions and the commodity cycle sort of underpin when that actually happens. And I tried to correlate those couple of charts on the right-hand side. Hopefully you can see them okay. The black line, the thick black line of both of them is the number of deals. And I tried to sort of correlate that with some ASX indices and also commodity prices on the bottom. They don't sort of correlate well with any one specific area. And I think that's really because it's actually a combination of all of them. We saw a jump in the number of deals in 2016. That's following a tough 2015. People sort of held back before they raised capital. And then it also coincides with an uptick in gold, and I suppose the start of that first lithium boom. And obviously we saw a big uptick in activity post-COVID. Everyone sort of held back a little bit. And then the floodgates opened after COVID. And we also saw that in IPOs, which I'll touch on shortly. The dashed lines on the far right-hand side, I've tried to estimate where we'll end 2022. Obviously, we're still middle of October, so a couple of months to go. But I sort of think there's a little bit more activity to happen. And that's obviously driven by market conditions. So we'll see where things land. But as I said, IPOs, there's been over 1,000 IPOs on the ASX since 2010. And then there's 41% of these have been in the resources space. So the blue bars are all IPOs, and then the gray ones are the resources specific ones. As I said, there's been a bit of a stall before COVID, and the floodgates opened in 2021 with all these IPOs. And as I said, I think it's reflecting a demerger. Larger companies are now demerging other assets in their portfolio, and they're becoming more focused on specific areas. Also, the commodity cycle has led to sort of older projects becoming more attractive in the current economic climate, and therefore there's new IPOs listing sort of older assets, let's say. There's also seems to be a correlation between the number of IPOs and the commodity price. And you can see 2013, 14, 15, gold, nickel, copper prices were coming off, less IPOs. And then from 2016 onwards, there's been a bit of an uptick. And obviously, post-COVID, things really started to move. 49, we're on 49 IPOs in the resources space year to date. At this stage last year, we were on 77 IPOs. So a little bit behind, and that's understandable given the way the market's been in the last 12 months. So just looking at the IPO performances in 2021, 107 IPOs in the resources sector. They performed actually quite well, 34% on average up. This shows the reason you might want to have a balanced portfolio. You go to the roulette table at the casino, you put money on all 38 numbers perhaps, because this shows you know, there's a big spread there, but on average, you're 34% up 12 months to date. So obviously some companies listed quite late in 2022 and they haven't been listed for 12 months, but this is up to 12 months post-listing. Gold last year in 2021, gold was represented 36% of these IPOs, copper 20%. Just want to highlight lithium is 10% of the IPOs in 2021, and we'll see how that has changed already in 2022. Really just focus on the colors here. Best performing ones to the left. Bit of a green tinge to that there, lithium and other EV IPOs. And unfortunately, given the market last year, gold typically underperformed in the IPO space. And I'll just highlight, like, it's a bit frustrating. I'm a geologist, worked a lot of my time in exploration. And I used to be frustrated by people would sort of hem you into a 12-month period to you know, gauge success. KPIs are on a 12-month period. It takes a number of years for exploration success. And so, you know, highlighting the performance, but really, you know, I always say any company's only a drill hole away from a success. So some of these companies on the right-hand side blink and they'll be, you know, 600% up before we know it. Excuse me. 2022, obviously a lot less IPOs, 49 year to date. Flat, well, actually down 1% on average across the board. Less gold IPOs, and I said, look at lithium, it was 10% last year. Lithium, 17% of the IPOs thus far in the year. And there's a sort of the spread, there was a bit more green to the left last time, a little bit of green to the left still, a little bit of gold to the right as well. But I think that there's a bit of a mix, more mix in colors there, and there's a few more rare earths IPOs, and I'll touch on rare earths shortly. And a PGM IPO, second performer there. So I've looked at where the cash comes from in IPOs and ECM work. Just wanted to highlight exploration spend, and this is a slide I frequently use. Exploration spend is on the rise. We're spending more money. That's reflected obviously in more ECM deals we're doing, and I spoke at the start, and the average value of the deals is increasing. But across all commodities and gold, exploration spend is increasing since 2012, and it typically tracks the commodity price. So you'll see the yellow squiggly lines above the bars. That's the commodity price relative to the exploration spend, and so they're all correlating, except I suppose rare earths. There's a bit of a gap there. The rare earths price has really risen in the last couple of years, yet we're not seeing as much expenditure. But I reckon if we look around the room, there's a couple more rare earths companies presenting than there were last year. So I bet 2023 rare earths expenditure, we're going to see a lot more than we are in 2022. One other point on this is, I used to think the gap between, so if you see, yeah, hopefully you can see that, there's a gap between the gold price and the bars, similarly in nickel, similarly in copper, less so in the others. There is an NdPr, but I touched on that. But these three, I used to think this gap represented M&A. There was less money being put into the ground and more money being put into M&A. So there was still the same amount of money being spent, but just less on exploration. I've been thinking about that a bit more. I reckon there's less money being spent in gold, nickel, copper perhaps, and more money being spent in sort of the new wave or new age metals or critical metals that traditionally we haven't spent that money in. So we're sort of moving away from the more traditional metals. And there was a great article in the, was it the AFR or maybe it was the Fin Review on Monday, and spoke about gold effectively not being as fashionable anymore. I just thought that was an interesting one. So have a look at that. Okay, so you've spent your money in exploration, you've perhaps made a discovery, you move into the mining studies phase. And so we're spending more money on exploration. We've hopefully made more discoveries. And if you look over time, the number of studies, that's scoping studies, PFSs, DFSs, have all increased since 2003. The best data set I could find was in gold is most complete. So we're just looking at a gold case study from here to the end of the presentation. 725 studies I assessed for this part of the presentation. Reasons the studies have increased, as I said, more discoveries, I think, because of more spend in exploration, but also that reassessment of projects. You're dusting off the folder of a project that perhaps wasn't economic in the early 2000s and reassessing it because given the way the commodities have gone, it is now looking a bit more viable. There's also been advancements in technologies, and so ore sorting and those sorts of things have probably made projects work a bit more. The little pie chart down the bottom, I tried to squeeze it in. Interestingly, over half the projects or the studies come from the Americas. And we quite often see US projects recently coming online haven't been mined since the 1930s. And so I think it's that dusting off of historic projects as well. And in South America, there's a lot of copper, gold, porphyry discoveries in the 90s. And they're this reflects them coming through development and study assessments in the 2000s, and hence we're seeing that rise. It's getting more expensive to build a mine. So this is capital intensity. This is dollars per ton throughput. And so really all I'm trying to highlight here is each of these little charts on the left, they're a bit small, but the essence is they're all going up, and that's showing the capital intensity rate is increasing over time. It's getting more expensive to build a mine globally, adjusted for inflation. Asia's a little flat. It's the purple one, middle left. That's probably the flattest out of all. And I was trying to think, why is that? And I think the raw materials are generally coming from Asia. So freight, the cost for the steel is probably less impacting in Asia, and hence the costs are flat or more flat there. But if anyone has a better idea on that, yeah, I'm happy to chat through it. Traditionally, the Americas are most expensive, and I think that's due to other factors, particularly in South America, like altitude and terrain. And generally, bigger is better in America, right? So some mines are typically bigger, I think. But I thought that was an interesting one to view. And then if you look at the actual size of mines, they're generally getting smaller. So since 2003, the lines there are broadly all trend lines, except Asia, don't know why, but are generally going down. And the average global gold mine is 3.8 million ton per annum in size at the moment. But that chart down the bottom right shows that the size of the mine is actually increasing or correlating, excuse me, well with the gold price. And obviously the Americas have the bigger mines, a 4.2 million ton per annum plant in the US, while Asia has typically smaller mines, 2.5 million tons. And I think that's due to grade. Mine size is probably decreasing because we're going deeper, we're going into undergrounds. And that's typically a higher grade mine. You're moving less rock, so you need a smaller plant to put that higher grade through. Discoveries are being made at depth typically. So we've done our studies. Capital to build a mine is a really key component. And we noticed that of the 133 companies or multiple studies, so that's that's quick. Of the projects. So when we move from PFS to DFS, typically capital goes up by 9% across the board, and that's pretty consistent. We're seeing, and that's of 133 studies we looked at. When it actually comes to building a mine, so you've done your DFS and now you're building a mine, we typically tend to overspend by 12%. So your DFS says one number, and by the time you've actually built the mine, it tends to be 12% more according to this data. Interestingly, Australia and the Americas and the rest of the world all tend to be 19% over. And weirdly, Africa on this data was 3% under. So they tend to actually stick to the budgets in African builds. I'm not sure how accurate that is. There's only 28 in the sample size here, so probably not a statistical number. So I need a bit more data points to accurately depict that, but I just thought it was interesting to highlight nonetheless. And then finally on to all-in sustaining costs. So we've built the mine and now we're operating. And usually the measure of that is all-in sustaining costs. I used to work at Northern Star, and we used to say we'd mine to a margin. And you can see that here in the top right. You got the gold price and you've got all-in sustaining, and they roughly parallel each other from about the mid 2000s onwards. That all-in sustaining margin has grown from 30% roughly in the first half of the 20 years here to the second half, 50% up. But I'm not sure if that's telling the whole story, because you've got obviously costs outside of all-in sustaining. You've got non-sustaining costs, you've got dividends, M&A, those sort of factors that aren't necessarily captured in all-in sustaining. And I think anecdotally, at least, we're seeing less free cash flow from producers in gold nowadays. And I'm just interested to see what the data for 2022 is going to look like, because I'm not sure that all-in sustaining margin is going to be in the same place. But suffice to say, costs are rising across the board, but so is the commodity prices. So just to finish, we've looked at the ECM, that's increasing. IPOs are increasing as well as the industry demerges, I think. Exploration spend correlates well with commodity prices. We're undertaking more mining studies. Mines are getting more expensive to build, and they're generally getting smaller. And capital is increasing across the board as well. But I'll leave it there. We're running out of time. Happy to chat to anyone throughout the next couple of days. I'll be around the conference. So thanks for having me, and have a great day.
Thank you very much, Paul. When I spoke to Paul this morning, I said, what exactly is the topic of this conversation, this first presentation going to be? And he said it to me probably 4 times, and I kept going, what? I said, and I realized I was listening with the wrong accent. It was cost. I can't understand, but that's all right. But I understand the speech brilliantly. So thank you. That was much better than how you and I started off this morning. But that was what led me to this running theme for our presenters this morning. I'm not going to talk for too long, because as Madam Lash, I have a job to uphold, and that is to keep us on time today. But the next fellow to come up here, as he walks up the front here, come on up, sir. There he is behind. Have a look at this fellow. He has something in common with the first fellow that presented to us this morning. Not only is he a fabulous CEO and Managing Director of Infinity Lithium Corporation, which is processing its flagship San Jose lithium project in Spain, and plans to utilise the EU's second largest hard rock lithium resource to sustainably produce nearly 20,000 tonnes per annum of battery-grade lithium chemicals on site. He's also a rugby player, a legendary rugby player who has been taken on by Cork in Ireland to play rugby. So Ireland is going to be a bit of what do we call it? A unifier throughout our presenters this morning. We're going to see if we can find an Irish connection to everyone this morning as we go. So this man in front of you has played Ireland for rugby. France has taken him on as a coach. He knows how to make things work and how to power through things. So let's see how he's going to help Infinity Lithium power through all their fantastic opportunities and what those opportunities can mean for you. Would you please make Ryan very welcome this morning, everyone?
Well, thanks for the kind introduction, Chrissy. And yeah, definitely that was a lifetime ago in Ireland, but still remain very firmly connected to Europe through San Jose and Infinity Lithium. Look, firstly, I'd like to thank Jackson and the team and Canaccord for the opportunity to be here today, and welcome you all here for Southwest Connect. You might just note the disclaimer. I'll be making some forward-looking statements, and hopefully much is accurate, and we can talk you through our flagship project in Spain. So my name is Ryan Parkin, Managing Director and CEO of Infinity Lithium Corporation, and we're progressing our flagship development of the San Jose lithium project in Spain. Our project will be using a large hard rock lithium resource on site as a feedstock to fuel a large integrated lithium chemical conversion facility. So in gross numbers, we're looking at close to 1.6 million tonnes of lithium carbonate equivalent that is available for us to produce up to 20,000 tonnes of battery-grade lithium hydroxide per annum over a long life of 26 years. We've recently been in Spain for a number of weeks and seen a rapidly evolving situation there politically in terms of advancing our permits. And we've negotiated an outcome with the regional government and in collaboration with local and regional stakeholders to commence our permit application process. And I'll talk a little more about that throughout the presentation. We've also seen over the last 2 weeks what is referred to as the Extremadura Lithium Decree Law. Extremadura is the region where we operate, essentially requiring all lithium that is exploited in the region to be processed in the region. So Infinity's project serves as a blueprint really for future development in Extremadura. The majority of our board now resides in Europe. We have a Spanish executive, Ramon Jimenez, who was appointed earlier this year, CEO of our Spanish subsidiary, and we expect to be announcing some further appointments over the coming months. We've also welcomed Ramon to the board of Infinity, and we've seen Ramon drive dramatic change in our project through local engagement and institutional relations to the point now where we're rapidly advancing our permitting process. We have a highly credentialed technical team that's driving the project. We've produced both battery-grade carbonate and hydroxide through our test work program that's being fully funded through European funds. Our company itself sees close to 416 million shares on issue, a market cap of close to 90 million Australian dollars, with more than $16 million in the bank at the end of the financial year. So what we've done is we've actually redesigned our project. So we've moved from a large open pit to an underground extraction method with an adjoining integrated facility, which has seen our output increase from 15,000 tonnes to close to 20,000 tonnes per annum. And there's no denying Europe's going to need vast quantities of battery-grade lithium chemicals. Our study that was released in Q4 last year saw a pre-tax NPV of $811 million US, and that was based on some pricing assumptions more relevant at that point in time over the life of the project to $17,000 a tonne. So as we move forward now, over 26 years of production, a relatively modest OPEX or C1 cost in the industry by way of benchmark. If we were to apply some more reasonable and updated pricing assumptions in the vicinity of $22,000 a tonne, there's plenty of blue sky here, noting the spot price at the moment is close to $80,000 a tonne. So if we have a look at Infinity, we base the metrics based on the resource size and LCE or lithium carbonate equivalent, and also in terms of the projected output per annum, we remain significantly undervalued in comparison to our peers. So we're again looking at a very large resource, 111 million tonnes or about 1.6 million tonnes LCE, producing close to 20,000 tonnes of 22 of those 26 years of production. We've seen significant investment globally in EVs or the move to e-mobility, the investment in lithium-ion battery plants, and a relatively modest investment in critical raw materials, which are really prevalent globally. We're seeing China dominate this space all the way from raw material processing in the form of battery-grade lithium chemicals through to electrification and automobiles. So, critical response is required. And in the case of Europe, we're seeing really significant numbers required by 2030, upwards of 1,000 gigawatt hours of lithium-ion battery plants. We've seen other projections close to 1,400 or 1.4 terawatts. So we'll need anywhere from 800,000 to 1 million tonnes of battery-grade lithium chemicals by 2030. And currently global production is less than 700,000 tonnes. So we're ideally placed to capitalise on this through the San Jose Lithium project. Again, just to repeat, it's a large-scale integrated industrial project using a feedstock on site. That's Europe's second largest hard rock lithium resource. We've got a proven and sustainable process that we've had funded through EIT and Energy and European funds over the last 24 months that has proven a more sustainable process than conventional hard rock lithium chemical conversion. We're building new opportunities for the region. Again, this is all about social license, local engagement, and ensuring the city of Cáceres and the region of Extremadura benefits from this project, which involves training and development programs and bringing new technologies to the region. We currently own 75% of the project and maintain a call option to move to 100% at any time prior to the final investment decision. So we're well placed here to control the project moving forward. We can utilise vast renewable energies that are aligned through photovoltaic and green hydrogen in the region, and we're now very strongly aligned to government. Again, just noting the size of this resource, you can see 111 million tonnes there at 1,000 parts per million cutoff, and close to 66 million tonnes at 2,500 parts per million cutoff. So this is a large and very significant resource that remains open at strike and depth. The project area itself, where the resource is located, is actually a tin mine from the 1960s. When you walk the ground, you can see the shafts, you can see the galleries, some dilapidated buildings. So the local community is very familiar with underground mining. There were various studies undertaken in the late 80s and early 90s that highlighted that there was a lithium resource here. And we drilled this out in 2019 for a JORC-defined resource. So this redesign and move underground, again, is in response to the local community. It's in response to the major stakeholders and to facilitate a pathway forward. And of course, there is a cost to that in the move underground. Obviously, moving underground, there are the aspects that are important to the local community. So we see not only in terms of opportunity economically, but also ESG credentials. So the move underground, the visibility issues, the noise and dust is something now that's been taken off the table. Of our total project capex of US $532 million, including a 20% contingency, more than 85% of that is aligned to the downstream lithium chemical conversion. So really, this is a project that is an industrial project utilising a large-scale resource as a feedstock to power that plant. Our process has been led by a world-class technical advisory committee. John Starrink there, who's the CTO of Infinity Lithium, has spent some time with Galaxy and has consulted on any number of lithium chemical conversion projects, and Dr. Dave Marie. So with their long-standing track record, they've guided our team through the funds provided through EIT and AUN Energy, essentially European Commission funds, to develop a process that sees a sulfate roast and ultimately minimise our tailings footprint in terms of its benign nature. This facilitates much of the tailings to be replanted above ground. We're in discussions with other projects to rehabilitate quarries or other areas nearby to the project. And with 60% of the material now moving back underground through infill, we have an opportunity to reduce our surface tailings to nil. Our test work program has recently wrapped up through EIT and AUN Energy. They've allocated more than 750,000 euros to the project to reach this point where we've produced in the kilos battery-grade lithium hydroxide with the optionality and proof of producing battery-grade lithium carbonate as well. We have a non-binding offtake agreement with LG Energy Solutions, one of the global giants in the battery space, and we're involved in any number of discussions at the moment with other strategic partners. And we're really seeking that level of investment and support and endorsement for our project for an end product that's in incredibly high demand within the European Union. Obviously, your sustainability and your environmental credentials are important. You know, the move underground, it's obvious the impact that has over an open pit, and it changes our tailings profile entirely. We note with our innovative and novel process that has just been patented over the last couple of weeks through a provisional patent, we're actually able to recycle much of our key reagents. So we have a very different tailings profile, and ultimately we have dry stack tailings that are benign and facilitate rehabilitation over the life of the project. We're actually able to work in harmony with the local community and use renewable energies to be able to power our project. We're looking to use green hydrogen to substitute natural gas to power the kiln, and this is in line with the strategic objectives of the Extremadura government, who are rapidly progressing PV and green hydrogen projects. By way of proximity, we don't have to move our feedstock or a concentrate halfway around the world to Chinese converters or even a few hundred k's, as in the case here in Western Australia. We're literally located less than 2 kilometres from the resource. We have a portal that will be facilitating a fully integrated facility. And finally, we're close to those end markets, and we're in an environment in Europe where we have a battery passport that's going to measure your CO2 footprint, and ultimately there will be penalties in place as those CO2 footprints vary for products that are imported through Southeast Asia or other raw materials from further afield. So we're in a great space in Europe, not only to service the market, but to be in alignment with battery passport in the community in Cáceres. So just quickly, in the last few minutes, we've spent some time in Spain. We've just got back. We've had a great outcome where we've directly negotiated with the regional government the commencement or initiation of our permitting process, which is really a massive development for our company and our project. This is a project that is now very heavily supported locally and regionally with the move underground, and with better explanation and aligning key players locally to the project. We've seen the announcement of a lithium decree 2 weeks ago that was ratified in the Regional Assembly. It's really a global first where we've seen the regional government determine if you're going to be exploiting the raw material, you have to process it in the region. So our project now is a blueprint for all other activity in the region of Extremadura. They're trying to capture the economic benefits and jobs, but also it's a double-edged sword. So other resources that could be discovered in the region would have to be a sufficient scale to facilitate the investment further downstream. We've committed to the underground development entirely, which is an important political move for us through the presentation of a letter over the last month. And we, again, working very closely with the local and regional authorities on all aspects of the project. So this presentation of what we call an initial document to start the process is essentially an environmental impact assessment scoping study. We're working with the regional government back and forth to determine the location of the integrated facility. We've given them 3 options within our project area. There's very little disturbance to the natural area. So this is a collaborative process where they're going to give us their feedback, which is binding, within 3 months. So we expect before the end of the year to have very firm directive that is going to be shaping the process forward. If we look at this timeline, we've now submitted that document a couple of weeks ago. We expect to have that feedback by the end of the year. we take those recommendations or essentially directives on board. They are binding to the point where we can lodge our exploitation concessions. So that is really a mining license application and our environmental impact assessment. Through the lithium decree, we've seen a commitment from the regional government to reduce the administrative timeframes, which is important for us. I mean, that's Spanish language for saying we're going to be accelerating the assessment of the permits required for this project. The other thing with the lithium decree, we've seen access to public funding. We have an opportunity to expropriate land as and when required, and also to circumvent various municipal or town level licenses that would be required. So again, this lithium decree is strongly aligned to our project, and you can see various quotes there from the president of the region, of the Junta of Extremadura, Mr. Vara, and also from Olga Garcia, noting for the first time the utilisation of these natural resources and materials are important for a region that is, steeped in unemployment and has massive depopulation issues. So just finally, this has all been driven through local engagement. We started in February. We announced the appointment of a high-profile CEO in Spain. He spent most of his time in the town of Cáceres communicating to the local community. So we've worked closely with business associations, the Chamber of Commerce. We've announced training and development programs. And even recently, 3 weeks ago, we announced the Extremadura New Energies, our Spanish subsidiary, battery academy. So we're offering 30 courses in the lithium-ion battery value chain and renewable energies to reskill, train and develop the locality of Cáceres to ensure that they can benefit from this activity in the region. So really just to round it out, I mean, this project's been around a while. We've had to redesign it to change our method of extraction, but the fundamental change has been in our communication locally and regionally. We've seen these enormous positive advancements in terms of now facilitating rapid progress to see this project permitted, and we're working with a high caliber team, both in country and in our technical team. So thanks for the opportunity again here today, and I hope you all enjoy the rest of the conference. Thanks for your time.
Thanks, Ryan. Appreciate it. Right, Jindalee Resources is a project generator. They're next up on stage today, and they have exploration projects both in Western Australia and also in Western United States. They recently celebrated their 20th anniversary of listing on the ASX. And here to share the latest update to the Jindalee story is their Chief Executive Officer, Karen Wellman. She's also celebrating a 20th anniversary this year, her 20th anniversary of arriving in the wonderful town of Kambalda. That might have been a culture shock. And the link to our last two presenters for her is Ireland again. Welcome. Would you please make her welcome, everyone?
Thanks, Chrissy, very much for the introduction. Yes, telethon weekend means it's my 20th anniversary of arriving in Western Australia. Moved from the big city of Brisbane to the little tiny town of Kambalda. So that was a little bit of a culture shock as a 20-year-old, but here we are now. So today I'll be talking to you about the Jindalee story. So it's going to be a little bit different to our usual presentation to those who've been following the story previously. Because I'm going to flip the script a little bit. We're going to start by taking a bit of a journey through our Australian projects, and then I'll move on to a bit of a discussion on our US assets. And then hopefully, if Chrissy allows me, I've got a bit more time at the end to give you an update as to where we are on our corporate strategy. Just the usual disclaimers if you've got some spare time to read them. So Jindalee celebrated its 20th anniversary. I've been on the ASX in July this year. Jindalee's followed a project generation model where we tend to pick up ground when it's not popular. So we're a bit commodity agnostic. So therefore we have sort of low entry costs. We work them up the value chain as far as we can. And then we seek to either continue to invest money and de-risk the project and take them up in the case of McDermott, or we seek to deal them on. So these two, it's pretty much a self-funding exploration model that has helped the company have success over the last 20 years. So these two photos are just sort of demonstrating the two groups of assets that we have in our portfolio right now. So on the left there, we've got a picture of the McDermott deposit, which is located in Oregon, USA, a lithium-hosted sediment-hosted lithium deposit. And then on the other side there, we've got something a bit closer to home. It's a photo from our Widgie-Wolfo project, which represents our Australian assets. And both of these groups of assets are company makers on their own right. So a bit of an introduction to our Australian assets. So we've got what I would call 3 core projects in Western Australia. We've got our Widjimulta project, located about an hour's drive south of Kalgoorlie. It's quite a large landholding, about 880 square kilometres in the heart of Kambalda Nickel District. Then we've got our Lake Percy project, located about 100 kilometres west of Norseman. So also a tenure in the Lake Johnston area, prospective for nickel and lithium. And as we announced yesterday, we've now got our Deepwell project, which is located up in the Murchison. We've signed a binding term sheet to acquire 80% interest in that. And we're quite excited by that early stage exploration, which is also demonstrating some potential prospectivity for nickel, copper and PGE systems up there. So it's also on this map, it's probably hard to see in the little tiny green dots. We've got what we call generative projects. I often get asked how we came to acquire like the large land package around Widjimulta. It doesn't happen overnight. That's been 5 years in the making of gradually building up that package there. So what we call the generative projects are the things that we're sort of planning for the future, the next projects which will come into our pipeline. So just taking you a little bit of a journey through Widjimulta, starting with our first, I guess, flagship project here in West Australia. As you can see, it's got red dirt, and I don't know about you, but as a geologist, I get quite excited when I see the red dirt around Kambalda and in Western Australia. It sort of makes me feel like home, part of Australia. So it's the heart of Kambalda Nickel District. Kambalda is synonymous with nickel production. It's produced, I think, about 1.6 million tonnes of nickel since mining began in the 1960s. As I mentioned before, it's quite a large landholding. We probably hold one of the largest land packages in that particular area. It's easily accessible, as you can see there. There's lots of tracks in the region. It's located between the town of Kalgoorlie. We can get to anything you need, and then the port of Esperance, and you've got the railway lines running through there too. So it's easy for us to get to. And also the area is probably emerging in its lithium potential quite recently, as you've noticed by the various demergers and things that Paul was talking about earlier in his presentation. So the potential for LCT pegmatite, spodumene pegmatites in that region is something which excites us as well, and it's much earlier stage. So our plan for Widjimulta over the next 12 months, as you can see on the map here, the area in dark blue is our tenement package. You've got the main highways running through. I've only put a couple of the major mines in the area because there is the area is sort of littered with prospects if you go out there. And also worth noting is that in these tenements, we've probably got we've only got about 40% of the tenements to be granted at the moment, and 60% are in application. So the work programs we've got proposed at the moment are based purely on our granted tenure. But there's more to follow in the pipeline behind that. So in terms of activities, we've recently completed heritage surveys and got our POWs in place. So we're ready to hit the ground running, and more on the timing is more about when that's going to happen a bit later in the presentation. But we're literally ready for the drill rig to turn up at this point in time. Our first plan is to do drilling at our Dawdy Far West target, which is a nickel target that we've generated, plus some assaying. We're hoping to get into that in the first quarter of next year. And then following that, in sort of second, third quarters, we'll be drilling our Mandilla, Higginsville and Sunday Soak targets on the western side of this package. Taking you for a drive from Norseman. So if you were leaving Norseman heading towards Wave Rocket Hyden there, you go about 100 kilometres along the road and you'll find yourself near our Lake Percy project. Lake Percy is a little isolated greenstone belt in the Lake Johnston area. Lake Johnston's very well known for its for the Emily Ann and Maggie Hayes nickel deposits, which have produced about 120,000 tonnes of nickel in the early 2000s. We've got 2 granted tenements there covering an area of about 180 square kilometres, and it's prospective for nickel and LCT as well. Highlights, it's been previously explored by people targeting nickel, and there is some interesting historic intercepts such as the 6 meters at 0.6% nickel, and this other one 70 meters at 0.7%. I'll just say that's a bit of a director's special, what we call. We believe the nickel's been remobilized along that, so it's not a true width intersection, but it gives you an idea of what's happening and what's in the system out there. So at Lake Percy over the next 12 months, I mean, we've recently completed heritage surveys and environmental surveys out there. Once again, have our POWs in place. So we are ready to go out there and into phase 1 of drilling. We've got this 15-kilometre strike length of Western Ultramafic, which we believe has quite a lot of potential for mass sulfide nickels. As you can see there in the historic drilling, we already have many assays sort of over that 0.4, 0.6% as downhole intercepts, or bottom hole, sorry. So we're looking forward to going there. We've got 8 targets along that Western Ultramafic. So although it looks like it's already being peppered, it's quite a large area to cover. So, and we know that these nickel deposits don't have necessarily a massive expression at surface. So we're pretty keen to get out there and start drilling. Plan is probably around Q2 next year at this stage. And just touching on Deep Well. So we've seen the announcement yesterday, we've signed this binding term sheet. We find Deep Well kind of pretty exciting conceptually, and it was brought to our attention by a couple of very smart people who used their lockdown time in COVID to generate these projects. So Deep Well is located in the Murchison, about 35 kilometres east-southeast of Meekatharra, and it's the southern extension of the Nulweeda Greenstone Belt. So the area, these guys who've identified it went out there and did some sampling and mapping, and they found numerous gossams at surface, which they then sampled along this 6-kilometre strike length, and they've come back with anomalous nickel, copper, platinum, palladium results. So that's got us quite excited because that's indicating that there's quite a lot of potential there for these massive sulfides. And the area is pretty much untested. So there was historic drilling done in about 20 years ago, and their lines are spaced about 2 kilometres apart, and they were only targeting gold. So we see that there's quite an opportunity here, and we're pretty excited to have that into our portfolio, as we think it works really well with what we have to offer with Widgie-Multha and Lake Percy. So moving on to McDermott. So McDermott's probably the project which Jindalee is famous for at this point in time, and where we've spent most of our time and energy over the last couple of years. So McDermott, as you can see there, it's located on the Oregon-Nevada border. The mountains in the background, that's the rim of the caldera, which hosts the lithium sediments. They were deposited inside of the Caldera Lake about 16 million years ago. So Jindalee pegged this ground in 2018. It was open ground, and you know, inside this caldera, it's quite super enriched. We've got the Thacker Pass, the Lithium America Thacker Pass deposit is hosted within the caldera about 30 kilometres away. So it's a super enriched caldera. Sediment hosted lithium is sort of emerging as a new source of lithium. It's not in commercial production anywhere in the world at the moment, but it's pretty much, they're like the porphyry coppers of the world. They're low grade, but they're huge, absolutely massive, as you'll see on the next slide. So we've managed to put together a raw resource, which makes it one of the largest lithium deposits in the United States at this point in time. And you can see there's a little red blob there. That's some old mercury mine that was mined out there in the 80s. So the region is familiar with mining. So recent developments at McDermott. In July, we announced our new resource update, indicated and inferred resource of 1.82 billion tonnes at 1370 ppm lithium, which gives us 13.3 million tonnes of lithium carbonate equivalent. So that's what makes us the second largest lithium resource in the States. We've recently commenced our drilling, and we've completed 21 of our 28 drill holes, which are permitted for this year. But more importantly, last week we announced the results from our latest round of metallurgical test work. So these deposits, in terms of geology complexity, they're fairly simple. It's the metallurgy side of things where we really need to figure things out to make it work. So we were able to produce, using the sulfation roast methodology, lithium phosphate there from our low grade ore. We've produced this, and it's quite important as it's a precursor chemical for batteries, for the lithium iron phosphate batteries. So it's very important. But you can catch up with us at our booth and talk about that. Plan for the next 12 months of McDermott is to complete our drill programs, assaying, mineral resource update due sort of March quarter next year. We're working on our exploration plan of operation. So we've just about finished our environmental studies that work into that. So that will launch us into our next phase of infill drilling, which will be quite large. We're doing our metallurgical studies. That work is ongoing, and hopefully we get the parameters to put into an updated scoping study sort of towards the middle of next year. So hopefully by now you've seen the two sort of different groups of assets. We announced earlier in the year our intention to demerge the Australian assets into a new entity called Dynamic Metals. There's a bit of a summary of which projects go where. I was really hoping today I would be able to tell you more about the structure and things like that, but we're still waiting on the, sort of the final tick of approval from the regulators. So you'll have to stay tuned. There should be some information coming out in the next week or so that will clarify some of that. So as I'm running out of time now, hopefully you can see that we have these two very different holdings, and they're not necessarily well aligned. We've got one which is overseas, resource for development. It's pretty compelling. I think it's got a very big role to play in feeding the supply chain over in America and, supporting the whole electrification movement. Our other asset is here, it's local, but we're in fantastic jurisdiction, well proven. The ability to move quickly into moving things through into mining is good. So if you are a Jindalee shareholder, subject to regulatory and shareholder approval, you will be able to get the opportunity to participate in the IPO for Dynamic as a priority entitlement. But also Jindalee will retain a stake in the company as well. So you'll have the exposure there. So it's a great opportunity, good time to get involved in these projects. Personally, I'm pretty excited. I'm looking forward to, I'll be the managing director of Dynamic Metals. So I'm looking forward to taking it down the exploration road there. We have a lot of work in the pipeline, you see. It's going to be very busy next year, and there'll be lots of news flow to come. But hopefully that makes sense. Come see us at our booth and have a talk, because we do have a lot of ground to cover. And we're right underneath the glass in the atrium there. You can't miss us. So thank you very much.
Thank you, Ms. Wellman. And yes, she was actually born in Ireland. So you hear a little bit of that lilt coming through there. This next fella, the only picture I found of him or connection to Ireland was in an Irish pub, believe it or not, in a magazine. I've got a picture of you. Do you remember that picture being taken, or were you having too much crack at the time?
Could be lots of photos taken.
Can't remember. This is Brad Valiukas, everyone. Would you put your hands together and make him welcome? He's the MD of Aurumin Ltd, and you've got a couple of nice little projects on the go at the moment. One out at Sandstone, and what's the other one that you've got? Is Southern Cross, isn't it? Southern Cross as well. So the one at Sandstone is one that they're focused on growing the mineral resource. That's their flagship gold project, and they're looking at moving that one to production. The other one is more of an exploration project, isn't it, out towards Southern Cross Way. So would you make him welcome today as he explores further the Aurumin possibilities for your investment portfolio?
Thank you, Chrissy, and thanks for everyone staying around for a gold talk. So we are gold focused, we're West Australian, and we're focused on projects that have been in operations before, and we think we can get them back to a operating status. Building a mining company, we listed a little bit under 2 years ago now. 100% we've been focused on that since we started. So we had assets in Southern Cross, and we picked up the assets in Sandstone late last year and early this year when we settled. Good board and management team. That's our background, is operations and development. We've been growing the company, 2 advanced gold projects now, with Mount Diamond in particular at Southern Cross, and our Sandstone assets, and we continue to progress all of those. Company overview, we'll go through pretty quick, but two key takeaways are market cap, just under $15 million. I think with the ounces that we have and the infrastructure, that represents pretty good value. And the second bit is that board and management speak for 15% of the company. So that's all money that we've put in, and we're very much aligned to shareholders and growing this thing. The team, again, there's a lot there, and I put it all up there because as we go to development, we're not an explorer that needs to augment our team, change our board, move things around, bring in new people to go to development. We're set up to do that right now. We can take these projects a long, long way. Huge amount of operations and development experience in the mix. ESG and sustainability, we take all that very seriously. I said at the start that we have focused on projects that have been in operations before. We've actually done a huge amount of work to clean those up at Mount Dimer, at our Johnson Range project, and in particular at Mount Palmer. So they're all projects that are now better for us having been there, both from what we've cleaned up from previous operations and from previous explorers. Sandstone will get stuck into, and certainly just on the right there, low carbon. We're certainly actively looking at options to be completely off grid for sandstone. I think we can do that very cost effectively. I've built several power stations in my time, and I really look forward to progressing that. So talking about sandstone, we've got just under 850,000 ounces on the books combined between sandstone and our Johnson Range project. For us, it's a great starting position, and we think there's still a huge amount of upside there, and I'll run through some of that as we go. Picking up an older asset, we've picked up some pretty good infrastructure as well, and regionally around sandstone, I think there's a lot of future there to put some things together. So this is our central sandstone project. We picked it up, settled, as I said, at the start of this year. So it's 22 million tonnes, relatively low grade at the moment, 1.1. We're working on that, 784,000 ounces. There's 11 deposits through that area, ready to go. Feasibility work was done previously, didn't quite get there. There's not quite enough critical mass, but importantly, the best asset was ignored as part of that, and that's where we've been focused. Infrastructure that's there at the moment, there's a 500,000 tonne per annum plant footprint. I think Paul was here talking this morning about how things are getting more and more expensive. And it's not just cost inputs that go into there. There's costs associated with regulatory and environmental and just the time process that we go through that gets more and more complicated these days. So having the physical infrastructure there, but B, also the footprint that's established is just great for us. So there's offices, workshops, there's a little bit of tailings capacity left there as well. There's the old pits that are there, so there's a huge amount of tailings capacity in reality. Roads, other supporting infrastructure. We're just out of the town of Sandstone. Great airstrip there. We've got 3 camps spread around the area, and then bitumen all the way down to Perth. So 2 Mile Hill and Shillington is where we've been focused on drilling front. So it's 157,000 ounces combined open pit resource between those 2 deposits. And for sandstone, this is a really key location to have the critical mass to go back to production. Relatively low grade. We thought at Shillington there's a fair bit of upside there. There's some controlling structures that run through, so we went and put some RC holes there. We had some really good results. There's 6 at 5.5 and 7 at 5.5, but there's also 4 at 5 and 8 at 5 in there as well. So that's pretty successful, and I look forward to bringing out a new resource with a little bit of extra grade. But really, really importantly, it was the 2 Mile Hill underground resource that had been previously modelled and worked on at 1.1 grams per tonne. So it's big, it's 500,000 ounces there. So for us, it wasn't a process of adding more ounces, it's been a process of getting the grade up in there. So we drilled 4 very deep and expensive for us holes through there. We drilled 340 metres at just under 1.3, 220 metres at 1.5, 350 metres at 1.5, and we finished with 240 metres at 1.2. So these are all holes. We've generated another sort of 3,000 points of data through there for something that have been sitting around and ignored. I mean, there's effectively more papers written on this from when Troy had it, through a little bit of stuff for Middle Island, than there were decent drill holes in this thing. So it was great to put those through. It was great to see all of those holes these massive intercepts come up at a better grade than what the resource was, and that's of course including all the waste in those massive intersections. So we're just finalising model for that at the moment, and we've promised before, this month that we would get it out. So sometime, I think hopefully at the end of next week or very early the week after, we'll put that out to market, and hopefully that helps to reset the story at Sandstone in terms of the resources that are there currently. Additionally to that, this is just in the footprint on granted mining leases. We've got another 11 geochem targets that are there, that are all sort of prepping now for either RC drilling or some air core over the top. So by no means are we finished just on that footprint. And then sitting outside of that, we've got another 100 square kilometres of tenure and applications there to go. We think there's some greenstones completely untested just to the north, and really happy with the two exploration tenements that are directly around the milling area as well. And we've been progressing those with soil samples. So I think our next drilling campaign will be on the targets we have on the existing mining leases, and again, a bunch of new targets off the mining leases. Off to the south, we had a project that for us was a little bit stranded when we listed, Johnson Range, at 65,000 ounces down there at 2.5 grams per tonne. We call it all inferred at the moment, but it is drilled out to 20 by 20. It's just a couple of things to sort of bring it over the line from a JORC perspective, but that'll certainly go up to Sandstone. So good road in place all the way. In addition, we have our listing assets. We have our Southern Cross operations, Mount Diamond and Mount Palmer, and I'll skip through those relatively quickly. But Mount Diamond produced 125,000 ounces at 6.5 grams per tonne, a series of small pits and a small underground. A lot of people even floating around the conference today have got some experience working there. We've got some high-grade unmined deposits there, Lightning and Golden Slipper on the next page. Some great, our best result at Lightning was 10 metres at 22. We also drilled 8 metres at 15. There's some other cracking results in there as well. Got another deposit there, so ready to go at Golden Slipper. There's 2 other pit cutbacks there to do as well, Frodo and the LO3 deposit. One new discovery that we had last year there was a T12 discovery, so some big broad intersections it's at 2.5 grams per tonne, just so 10 metres below surface, effectively at surface. And really our focus right there right now is on expanding that resource base and growing it. So we've been focused at Sandstone so far this year, but good opportunity for us to step out and do a little bit more regional work at Mount Diamond, and we have a very large and prospective footprint there. Some of it's been tied up by iron ore for a long time now, and it's had no real gold work done on it at all. We also have our Mount Palmer project. We've got a nice little package of ground down there, sits between our Mount Palmer mine, that mine 158,000 ounces at 15.9 in the Mayfield quartz lodes, typical what you see on most goldfields deposits. Further to the south, you've just got off our ground the Navoria deposit there that's at least 400,000 ounces now. Hasn't been reported as an update for a while, and you've got Yilgarn Star sitting there in the sediments at 1 million ounces, so very prospective, and we continue to work on that. So investment drivers for Aurumin is we have very clear focus on building a mining company. So even when we talk about exploration at Sandstone, it's very much focused on generating things that we can put through the plant. We have a very good idea of what works and what doesn't work. We're certainly not up there just to build a resource. We're there to get the right resource that will make us money. Good board and management, as I said, this is what we've done. This is our bread and butter, and just the starting point for the company. We've delivered on our growth ambition since we've listed. We've grown the company substantially in terms of our assets, and we continue to be very, very active in looking to grow that. And news flow, give it a week and we'll have updated model out for Sandstone. That'll be the big one. So feel free to come and see me at our booth and talk about the story a bit more. Thank you.
Thank you, Bradley. That was a very calm presentation. That was great. Was I right about the Ireland one or not? The picture of you in the bar at Finian's? You don't remember? Go and give us an Ireland connection. Do you have one? Excellent. What did you do? Okay. Brilliant. Thank you. I thought I was failing there. Graham McGarry, this is a legend of the Kalgoorlie, the world of Kalgoorlie, where I was born and grew up. He's well known in the community. And if you look for him in Ireland, it would involve probably drinking some Irish beer, wouldn't it, sir?
Thank you, Chrissy.
Sorry, no, you know what it is? It's a little bit tricky to hear across the stage here, so I'll come across. Graham, thank you very much for coming today. So what we were trying to do is find a link between all of our presenters today and the world of Ireland. So have you got a link to Ireland?
Yeah, no, I haven't been to Ireland.
I
No.
do, well, you better go over so I can think. You're ruining my straight run here. Even the next bloke's got one. So just think about it as you go. But as I said, he's a Kalgoorlie legend, and I, of course, I come from Kalgoorlie as well, but you're Goldfields royalty. And this man's always at the forefront trying to push projects and push things that make the Goldfields better. And a couple of years ago, they came upon this little project, Jody, and I've spoken to a couple of miners and explorers out there, the great Scotty, etc., who talk very highly of the project. So I'm interested to hear how you've been going. 2018, was it? What year was it? Yeah. So interested to hear how it's going. They're fairly modest producer, but they've got a lot of upside. So please listen with interest and make him welcome.
Thank you to Christine, and thanks to Canaccord and RIU for the opportunity to present at the show. I have a standard disclaimer. I think we all know what happens there. We'd also like now to play a short video to give you some idea of the background of the operation.
Beacon Minerals are a low-cost gold producer with projects in the West Australian goldfields. Beacon Minerals own and operate the Geordie Gold Project northwest of Coolgardie. The discovery of the Lost Dog Paleo Channel gold deposit in 2017 unlocked mining at the Geordie Gold Project. This deposit sees both exploration targets and mining continue. The processing plant at Geordie is a carbon-in-pulp gold treatment facility, which has expanded since commissioning in 2019 and keeps producing record throughputs. In 2021, Beacon Minerals announced the acquisition of McPherson's projects around 5 kilometres south of Coolgardie. This acquisition has delivered an increase in mineral resource estimates and exploration targets. A core strength of Beacon Minerals is turning exploration projects into viable and profitable gold-producing assets, positioning the company for future growth. Safety, ownership, adaptability, reliability. Beacon Minerals.
Just in that slide of the processing, you'll see the difference in colour between the clays and the silkrete, which has always been a challenge in the goldfields and was a challenge in this case, but we've managed that quite well. But there's quite a discrepancy when you're processing the ore, and we segregate the ore and then we blend it back. A corporate snapshot of Beacon. We have cash on hand of $19 million at the end of September. We have a minor debt to Caterpillar Finance. There is a focus on dividend payments, and there are shareholders seeking a continuation of the dividend. We have engaged in a transaction with the owners of the Gecko mine, 19 kilometres away from Geordie. And when that transaction completes, if it does, we'll announce our view on dividends and or final dividend for the 22 year. We have an established process and management team at Geordie, and it's led by Darren Gaby. Recently, the 2 fatalities in the mining industry will make a lot of focus on the processes and compliance procedures that have to be in practice at a mine site, and we expect greater scrutiny. We had a full, not investigation, a full review by the Mines Department recently prior to the final sign-off on our tails dam, and we had no major issues. Beacon is a consistent business, and we will continue to play that role in the Coolgardie area. We have franking credits available for our shareholders. This shows the Geordie TSF prior to commissioning and the early start of panel 4, and you'll see where we've progressed from that a bit later. We currently have 3 years mine life. If the Gecko transaction goes through to completion, it will add another 2 years to our mine life. We're certainly in the Coolgardie area. We're in the Coolgardie area to play the long game. We're not planning any plant expansion. We want to underpin our life of mine there from 5 to 10 years. That is our hope and vision, or is our plan and vision, not a hope. So we will get there. It'll just take some time. This is the performance highlights. By April 2023, we'll have completed the mining of panels 4 and panels 3, and we'll have significant stockpiles of ore prior to commissioning McPherson's. The blending of clays from panel 3, there's a higher proportion of clays in panel 3, and they will be blended with the harder ore from McPherson's, in an effort to maintain our current throughput, which is probably at the upper end of what we can do. So we plan to continue a blending operation. Our budget gold price for 2023 is $2,500. Currently, we're slightly above that for the first quarter. And on today's price, one would hope that we'll exceed $2,500. Discovery to production was quite short. We were able to do it in 2.9 years, 2 years and 9 months. The Minister for Mines commented on that at the opening of the mine, and he believed it was a record in the last 20 years of mining in Western Australia. This is the Geordie processing plant. The 2018 pre-feasibility study was based on 500,000 tonne per annum. The current run rate is plus 800,000 tonnes per annum. So we have overperformed in terms of throughput right from day one, and that's a credit to Jeff Greenwell, who designed the plant. Our tails capacity for full year 22, we used a lot of waste from panel 4 to build the new Geordie TSF. The cost, including the cost of construction, the commissioning, and the final approvals exceeded $6 million. So that was quite an investment out of our cash flow to demonstrate that we have confidence in the long-term future of our investment in Coolgardie. Our current tailings life is 7 years. The Lost Dog open pit this is a more up-to-date photo, only a week or so old. You'll see in the upper section, Lost Dog panel 2 and 4 is close to completion. Lost Dog, probably about 2 months to go. Lost Dog panel 3, the pre-strip has started. We're using a contractor there, Hampton Mining Services, to do that with rigid trucks. Sections of it are quite hard, so we do have a drill and blast procedure there, but that'll stop shortly. The bottom half of the slide, you see there again the difference in colour. We mine the clays, which are higher grade. We mine the clays using our own fleet of 90-tonne excavator and articulated trucks. At times it's quite boggy, so the trucks occasionally get bogged and have to be pushed out. Clays are also a problem at the Gecko deposit and have been the problem for the past operators and owners of the project, but I think we've demonstrated that we can handle clays. The production and life of mine case, we believe in a concentration of force, so you do see currently 2 sets of equipment working at Lost Dog, but we've got to go, we are going to go deeper into the owner-miner model, and the successful exploitation of McPherson's and potentially of Gecko will require the use of rigid trucks and will require double shift. So we will move further down that line in the short term. Exploration, we have a budget of, I think it's $2.9 million this year is the budget. Some of that is on infill drilling. We have our focus now will shift to finalising the detailed design for the McPherson's open pits, and that mining will commence in April at McPherson's, but in the period from now to then there'll be infill drilling. We won't be neglecting our other areas, but the focus will be on McPherson's open pits in the short term. The offer to acquire Gecko, the transaction is now in day 13 of the due diligence period. We're into drafts of the final transaction documents. There's no guarantee that the transaction will go to completion. The vendor does have some constraints on him. He has to comply with some of the conditions precedent. But we see that if it goes through to completion, we see it will add 2 years to the mine life at the Geordie project. Our sustainability. We maintain close relationships with the town of Coolgardie and with the Shire of Coolgardie. They are a key stakeholder. They are our key stakeholder in that development of our Geordie business. We formally meet with the Shire President Mel Cullen next week, and those meetings are held at a senior level once every 12 months. And a lot of it's around movement of ore around the district. We will impact on people, so therefore we have to consult with our key stakeholders, in this case, the Shire of Coolgardie. We enjoy good relationships with them, and I think whenever we move somewhere, we generally have no difficulty relating to the local people, because we are country boys ourselves, and we take into account the people who are affected by our operations, and we try to get the community heavily involved. So our focus for 2023. So we have we are currently operating at the upper level of our guidance again. We will focus on increasing our resources and reserves, either by acquisition or by discovery. We have been involved in Timor-Leste for some time now. We have had a permanent presence there since August last year, a 32-year-old lady who's a qualified geologist and geotechnical engineer. And she's family has long roots back into Timor-Leste, particularly in the eastern part of Timor-Leste. And very happy with her. I was up there 2 weeks ago. We've paid dividends of $34 million since March 2021, but we're not sure how much money we'll need to retain for growth, but we will not be frightened to outlay money to acquire more ounces. I previously spoke about the grade control drilling at McPherson's, and that will commence very shortly. There'll be a strong focus on cost control. It is difficult to contain costs in this environment, and I notice that Northern Star is of the view that costs may have plateaued. We're of the view we've just seen our first reduction in consumables, in that the cyanide price for this quarter has gone down. Cyanide is a reasonable size cost to us, so the fact that it's gone down is welcoming, but obviously, labour remains a problem. It's highlighted in the financial review this morning that labour at all levels, it's not just at the tradesman level, and it's certainly not at the upper level, but down at the grassroots level, you do need people. Now, we are well advanced on bringing graduates out, graduate mining engineers and metallurgists out from Timor-Leste. We started this process in March. We advertised up there, and our lady recommended we advertise for graduates. We had 130 applications. We brought that list down to 18 because English, the ability to write and communicate in English is an important part of mining. And so that list came down to 18, was selected out of that 8, and we hope to have them on the ground in January 2023. The Timor-Leste government has an approved mineral act. It took a long time to get there. It's based on the West Australian Mining Act. I've met the chap who designed the act. A chap named Mr. Textura, quite an impressive fella. Under the current published timetable, the Timor-Leste government expects to allocate tenements before the end of December. Our principal interest has been in copper and gold. We're well experienced in that, so our primary focus is on those 2 metals. We do have a vision, and it remains focused particularly on the Coolgardie area. We have a team on the ground that's experienced, settled, and we do want to add to the resources there, and that is our main commitment, and maintain a solid business going forward that will generate dividends for our shareholders, and also money for growth opportunities that may emerge. We're playing the long game. Mining is not a short-term business. It is a long game, and you've got to be prepared to make the commitment for the long term. So why invest in Beacon Minerals? The gold sector has been punished in Australia, and quite rightly so. There have been operators that have gone forward probably with overambitious timelines and costs, have been punished by the sector. We have not, we've gone beyond that, but we have also been punished in terms of our share price. We accept that. But for yourselves as investors, I think if you take a contrarian view and you're prepared to buy straw hats in winter, you should seriously look at buying Beacon shares. We think the stock is at the bottom end of the cycle, and the opportunity is there for you now to look at buying stocks if you have a view that gold does have a long-term future. Thank you.
Thank you, Mr. McGarry, indeed. Right. Now, you may have ruined my perfect Irish run, but this next fellow is not going to. Come up here, Mr. O'Neill. Come on. I looked at that name and I thought, well, there's another Irish connection. And then I found out he's actually Ukrainian. That's Ukraine. Well, half. So you've got a bit of half Irish in there. So yeah, has actually spent a gap year almost, or some time traveling in Ireland, visiting relatives.
No, just holidays and
Just holidays.
yes. Sing.
Yeah,
No. It's the name. That's the only thing that's persisted through the name.
Is it really?
Which I don't know how it's made it through like 7 generations, but it's
Just
the
the
Irish
name.
in this. Yeah,
All right,
we're
well,
a resilient bunch.
That's right. Yeah, you're keeping up my Irish things today. Would you like to hear about more investment potential, Ashley Johns? Is that what you're here for? Good. Enough about my Irish. Ashley's from Kalgoorlie as well, everyone. He and I actually went to primary school. Stick your hand up, Ash. Look at this bloke here. And he semi-retired to fabulous Busselton to help build a Busselton. He's a very good builder, or he was in his former days. Are you just investing now, Ash? Is that it? Coming to things like this and just investing. That's right. Dave O'Neill may have something for you. So Dave O'Neill is actually the managing director at American West Metals, and they're here to tell us about the company's major base metal deposit in North America. They've been very, very busy of late. Dave, I will hand over to you to explain the full story. Please make him welcome, everyone.
Thank you. Thanks for sticking around. I know it's probably coffee time, 10:15, but I appreciate you hanging around, that's for sure. So I've got a lot to get through. I'll try and move pretty quickly, but as you can see with the name and certainly the terrain, this is not West Australia at the moment. This is our West Desert project looking towards Nevada over the Deep Spring Range, and the Snake Valley is Nevada. So we're very on the western part of Utah, one of our 3 projects. There's lots of arm waving in this, obviously, lots of forward-looking statements. We've got some big deposits with some very close relationships to other deposits. So you'll hear me talk about analogies and things like that. One thing I will discuss as well is that we've had a lot of news flow. So please go back and if I don't cover everything, look at our what we've done this year. As well, the resources I talk about are NI 43-101. The Canadian geologists are just as smart as we are. So they're valid resources. And very robust, and we're going to build on those in the coming months. So where are we? We have 2 projects in Utah, West Desert, which is essentially our flagship project, Copper Warrior, which is Southeast Utah, and we're in Nunavut with Storm Seal in the Canadian Arctic. So look, like real estate, location is everything for projects. You heard Paul talk about infrastructure costs, inflating costs, and certainly part of the design for us when we put this portfolio together is being close to large operating mines. Obviously, there's synergies in infrastructure and things like that, but people also understand, so there's social implications as well. People understand mining and are used to it. And so that was one of the keys for us. The other key is that there's existing resources. We all know the exploration success in greenfield situations is very low, less than 1%. Certainly when you've got brownfield assets with exploration potential, it certainly is more favourable. So we've put so we've got over 1.5 million tonnes of zinc at the moment, a couple of 100,000 tonnes of copper. We're working on a JORC compliant resource at West Desert, so that's going to grow. So we have fantastic foundation, which we think is going to underline our valuation, and we've got a really good team to make that happen. So just quickly on that. The Australian contingent is John, myself, and Mike, and you probably know who we are. We sort of put the IPO together for American West Metals. Someone you probably don't know is Tom Perry Goodoff, ex-BHP, Peregrine Diamonds, extensive experience working in the Canadian Arctic in the permitting and also in the community liaison side of things. Part of our license to operate was to have boots on the ground in terms of the North American team. So we've got advisory guys there, Bob Schaefer, Mining Hall of Famer, and George B, who's a mining engineer and runs a US gold company over there. So having those guys and their work has been fantastic for us. And Tom Earlrich is based in Toronto. He's our joint venture partner with Aston Bay Holdings and a copper specialist, and put a lot of the theory behind the Storm discovery, which I'll talk to. Again, just quickly, look, for us, we've been very resilient this year. We've only been operating for 11 months or so. The key takeaway, I guess our curve is very flat in terms of share price, certainly not top left to bottom right like a lot of exploration companies have been. So I think that's built on lots of regular news flow and really good news flow. So I think that's built a foundation. Obviously, some very big, trading events, which I'll talk to, which is in the latest ones, the Storm copper discovery. West Desert. So enough for the side salads, meat and potatoes now, the good stuff. I'm a geologist, so forgive me if I get too technical, but this is fantastic projects and I love talking about them. So look, like I mentioned, we're located Western Utah. Utah is a fantastic state. They've really rolled out the red carpet for us. They're very pro mining. Bingham Canyon overlooks Salt Lake City. You can't get any more mining than that. West Desert is located in a severe orogenic belt, which hosts Tintic mining area, Bingham Canyon, Park City, which lies off the map, and these are all related. West Desert's essentially a very large, it's been historically a very large and low grade, relatively low grade zinc, copper, indium and silver deposit. We've identified the real value, which is a coherent high grade core of around 15 to 20 million tonnes at much higher grade zinc. But I'll talk to what we've done in the recent past on that, which will definitely see the resource grow in that space. These rocks are identical to Bingham Canyon in terms of geology. So it's a quartz monzonite, exactly the same age. And there's similarities in terms of all of these operations in terms of how the exploration histories and how they're emerging. So this is what the deposit looks like essentially. As described, the light grey is essentially the 60 million tonne lower grade halo. But as you can see, simply changing the grade tonnage curve, there's a very coherent lenses that sort of stick together. That for us is the focus. Much higher margin mine, much lower footprint, much lower development costs. Recent work we've done, the historical work we've done on the sulfide part of it, the metallurgy shows excellent recoveries, over 95% recovery of zinc, over 85% recovery of copper. Makes fantastic concentrates, 55% copper and 32%, 55% zinc and 32% copper. Very clean, no deleterious elements. So that was the historical work. Recent work that we've done shows that the oxidized part of the ore body, which is this upper lens near surface, has also got very amenable to traditional acid heap leaching. So most zinc oxides, as you probably realize, are terrible. They use way too much acid. The beauty of this one, as the course of the crush size and the course of the particle size, the less acid we're using, and we're still getting very high recovery. So we're getting up to 80% recovery in the oxide with very low acid, only 40 to 80 litres per tonne, which is most of them, over 400 litres per tonne. So that definitely, what that does for us, it brings the development optionality into it. We're likely to see a very large pit. We can mine to much lower cutoff grades, down to about 0.7% zinc. What that'll do is bring all of this light grey into a potential pit, and then we can go into an underground operation. So it allows us to stage this. The historical PEA showed that they're going to go underground straight away. It was a very large capex to get that going. We believe that we can have a simple heap leach operation, stage it into a sulfide underground. Now, historical resource didn't report gold and silver. There's very large gold and silver content to this ore body, and indium. This is the largest undeveloped indium deposit globally. Most of the indium in the States comes from China and Bolivia. So this is a strategic metal, and we've got already over 56 million ounces of indium. Indium's used in touchscreens and things like that. So it's very critical metal, and it's a hot topic at the moment in terms of chain of custody in the States. Look, we've just completed a drilling program back in July. Every meter added value to this project. Every drill hole hit significant intersections of zinc, copper, and indium and silver, like I said. The drilling was really focused on determining the continuity of that higher grade model that we talked about, but also extending it and exploring the porphyry, which lies adjacent to the skarn. Like I said, this is similar to Bingham Canyon in terms of rock type. We just drilled a hole down the margin of this porphyry, which intersected some skarn, and you can see high-grade copper, up to 7% copper on the margin. And also we hit over 400 meters of molybdenite mineralization. So that is at the slightly higher grade, the Bingham Canyon as well. So what this looks like, it's an emerging system. The porphyry is a molybdenite rich porphyry. We get up to 4% moly at depth in this part of the ore body. And then the zinc and the copper lenses sit adjacent to that. So that's something that's emerging here. This is like looking down on the deposit now. You can see this is a 2% zinc cutoff. It's a magnetite skarn, so it's magnetic. This is a magnetite image. You can see all this high light colored area is extremely positive magnetics. You can see here that along strike, we drilled a hole here last month. You can see that we hit 250 meters away from the current resource in the middle of this large magnetic anomaly. We hit high grade copper and zinc, had over 20% zinc in this intersection. We think we're off the porphyry margin. We should be up to the north. And this historical hole here is hit high grade copper and zinc a kilometre out to the east here. Now, the thing about Bingham Canyon, the thing about Tintic is you have a porphyry and there's usually clusters of these types of deposit around it. So as you can see, most of the drilling's focused actually only on the West Desert area, and we believe that this is going to expand. So for us, certainly the short-term focus is the development at West Desert, but we strongly believe that organically this will grow and give us significant upside in mine life. And look, just to talk to, in terms of our current valuation, where we sit, like even if we just including West Desert and the current PEA resource, you can see, if we lower the cutoff grade and this goes upwards, that's very favorably compared to some of these other deposits. And you can see the evaluations. This is moving obviously and changes daily, but it's a simple, graphical description of that. I think we're severely undervalued, and there's significant upside in our valuation. That's just on West Desert alone. Now, Storm. So this is what got that spike going in the last couple of months. Remember this photo. This is how Storm was discovered. There's massive chalcocite essentially sticking out of the ground up there. And the geologists back in the day found this stuff sticking out over 15 square kilometres. Now, before you roll your eyes, the Arctic this is really Arctic for beginners. It's fantastically located. Seal sits on the coast of Aston Bay, and Storm sits about 12 kilometres inland. So this is a historical mining district. Polaris has mined for about 23 years. Nanocivic just lies off the map. That's another lead zinc mine, which is just off the map here. But that was about 17 years. So this is like an early stage Mount Isa equivalent in terms of geology. Seal's a high-grade zinc deposit and silver. And Storm, like I said, is a bunch of copper showings and an emerging copper system. So two very distinct deposit styles, very similar to Mount Isa. Resolute is essentially the Kalgoorlie of the north. Everything in what there is there, fuel, logistics. Most of the people from here worked on these other mines. So they're very, and in fact, they work on our project as well. So we've got fantastic support from the Resolute mayor. In fact, he manages most of our logistics. So community-wise, there's also, though it's Arctic, we only get 1 metre of snow per annum up here. So this is actually an Arctic desert. There's not a blade of grass. There's not a beast. All the prairie caribous ride their icebergs down here. There's not a tree. So in terms of environmental footprint, this is very, very benign. So Storm, this is what it looks like. So if you can imagine that rock photo I showed you before, hard to see, but all these sort of green blobs is essentially where that copper's sticking out of the ground. So we realized very early on when we're adding projects to West Desert that this is really underdone. You can see that there's a bit of a shotgun approach to the drilling here. This is basically, they used to drill under these gossames and hope for continuity and these things extending at depth. 4 major zones were identified where there's a significant critical mass of this kind of mineralization. And so what we want to do is we wanted to do an EM survey just to really see how these things continue and see if we can identify new targets. Two surprising things that occurred with that. Obviously, there's lots of these blue plates, lots of targets that haven't been tested by drilling. So that was very, very good. But the other thing it identified is these large, flat, lying and deeper anomalies that are sort of associated with these zones. And I'll talk to that in a second, but that's a significant breakthrough for the project. You can see they also sit very favorably along these large structures, which is a horse and graben structure, which is important. as I'll talk to. The other thing we did is we thought, look, there's a critical mass of this mineralization. It's mostly chalcocite, which is 80% copper, as you know. So we decided to, I'm going to have to move here. We decided to see how this thing ore sorts, because it's very simple mineralogy, chalcocite and dolomite. We crushed it, put it through a full-scale ore sorter, crushed it down to 1 inch. Full-scale ore sorter, we made 53% copper, 10% and 0. This stuff, you can see there's dolomite and bits and pieces on it. This stuff will upgrade with further beneficiation. So what that provides, this potential for this project, is one of the highest grade DSO copper products globally. We think we can upgrade this to about 70% copper. That'll travel anywhere. In terms of ESG, there's no tailings dam, there's no processing plants. It's essentially a quarry where you, like a limestone or a road-based quarry, where you drill and blast, crush, screen and send. So the ability to do this in the Arctic, there's some analogues in Western Australia where they've used these machines, very low capital intensity to get going, and then it's really low operating costs as well. So in terms of ESG, very low footprint, and we could be a leading, I guess, global leader in that kind of side of things. We decided next thing we do is to get the drilling up there to actually define enough of these resources. All of this is what these kind of intersections, what really got that share price moving. That sticks out of surface. So look, it's a couple of 100 meters long, this zone. Across the main gorge there, you can see there's a 60% copper sticking out of the ground, and the geochemical anomaly extends for another kilometre. So we think there's enough critical mass mineralisation here to begin a DSO operation, and that's just 1 of 4 areas that stick out of the ground. But just quickly, we're running out of time. This is the most significant development for the Storm. BHP and Antofagasta did joint venture into this project, and this is what they were looking for. One of those deep targets we had to drill this year. We wanted to test what one of these EM plates was. We drilled the margin of it, and we hit 68 meters of chalcopyrite mineralization from about 250 meters. So that was the very first hole. We think we're good geologists, but at the same time, it's probably 1 in a million to be able to hit something with 1 drill hole. So as you can see, that EM plate is attached to a very large IP anomaly. That whole system there is about 5 kilometers long. That sits under the 4100 high grade zone. And you can see these very large gravity anomalies associated with that as well, sitting along these faults. This mineralization looks very similar to the Kamoa-Katula deposits in the Congo in terms of genetics, and also the Cooper-Schiefer type deposits. So I'll leave it there. There's way too much to go on. We've got another project. Come and see me in the booth. And if you needed more information, we've got lots of news releases you can go through as well.
Well done, Mr. O'Neill. Well done indeed. Okay, we've got 2 presentations to go before. You did a good job. It's okay. It was fantastic. And the idea is you want to leave them wanting more at the end. They need to come and talk to you if they know everything. It's, get them to the booth. So would you like to come and join us? We are going to go to a little company that they've been around since 2017. They listed on the ASX June last year, correct? Yes. June last year. They've been doing a bit of exploring though, and in that time, they found something they think is pretty good. The Paris Gold Project, which they believe is the best available gold project in WA at this point in time, don't they? But they're not giving up because they intend to build this great, fantastic portfolio of revenue building potential for yourselves as investors. This is Cristian Moreno. He is Torque's MD. Would you please make him welcome, everyone?
Thank you very much. Good morning, everyone. My name is Cristian Moreno, Managing Director of Torque Metals. And this morning, I'm going to explain you why Torque Metals is one of the best junior gold exploration companies in Western Australia. So a little bit of disclaimer, this presentation was uploaded to the market this morning. So you can download the presentation from the ASX platform as well from our webpage. It is worth mentioning that all the exploration results within this presentation were previously released to the market, so nothing new is going to be presented here. So let's start with the board and management. Ian Finch, Executive Chairman, geologist, founder and director of multiple ASX companies. Patrick Burke, lawyer. It is always important to have a lawyer in your board. So he's a non-executive director. He's non-executive chairman and director of multiple ASX listed companies. Tony Blockhouse, another geologist. He has plenty of experience in the banking and in the broking sector. And finally, Neil McKay, CFO of our company. And he has listed multiple companies in Western Australia in the ASX. So our capital structure. So currently we are in 18.5 cents. Our market cap is $15 million. We got 80 million shares in issue. But what is really important about this slide is the stability of the share price. So as you can see on the graph, so we don't have any big spike or any low spike. We are currently trading at 80.5, as I said before, but it's unstable sort of graph. We got a problem here, and I have to be honest with you guys. We don't have enough liquidity. So that's why we are generating noise here and letting you know that this company is different and the reason why you should invest in Torque. So let's go directly to the project. So we got two fantastic projects, the Bullfinch project located in Southern Cross and the Paris project located nearby Kambalda, Wigimolda. So our flagship project is the Paris project. We are going to talk about this project in this presentation. And if you want to learn about the Bullfinch project, you can join us in our table, and we are going to be more than happy to explain you everything. So let's go directly to the Paris project. Where are we located? We are on the Boulder-Lefroy Fault, the best place in the world for exploring for gold. We are 12 kilometers southeast from St. Ives. As you can see on the map, there are plenty of yellow dots. They are representing drill holes with grades above 5 grams per ton. So if you follow that lineation there, you are going to go from, you're coming from the Kalgoorlie Big Pit, then go to St. Ives Goldfields, and then go directly to our beautiful and fantastic project. So we got the potential here to generate another world-class gold deposit. And the only thing that we need to do is drill, drill, and drill. But for doing that, I need money. So this is our project. That is the area that we own. As you can see in the magnetic image, plenty of potential. So over there, you got some of the last results, but we are going to go a little bit deeper on there. We got a joint venture with Jindalee. By the way, 80% of the tenements belong to Torque and 20% of the tenements belong to Jindalee. Currently, Sensor is exploring that particular tenement here in the north, and they are using a magnificent machine learning algorithm, and they believe that that tenement is amazing. And guess what? That tenement belongs to Torque. This is our area, 173 square kilometers of land, 100% owned by Torque Metals. But what is really important about this slide is 9 mining licenses. So we own 9 mining licenses, and if we want to go to production right now, we can do that really, really quickly, okay? And let's go to the prospects. So let's start with the Paris prospect. Let's talk about just the grades. 27 meters at almost 11 grams per ton. That was a month ago. 3 months ago, 27 meters at 8.16 grams per ton. 6 months ago, 24 meters at almost 11 grams per ton again. And 8 months ago, 21 meters at 4 grams per ton, almost. So as you can see here, we are talking about a high-grade gold prospect. Many companies can tell you, I got a fantastic project, a fantastic result, 20 meters at 1-2 grams per ton, but we got 30 meters at 11. So what is Torque? We really are a fantastic company. So we got a structure of 900 meters, plenty of gold underneath the pit. Yeah, we got 34,000 ounces of gold underneath the pit. We got mineralization to the west of the pit, open, and mineralization to the east of the pit. So if we check the section, this is the section, 900 meters strike length, full of high-grade gold. And 3 weeks ago, we discovered a new structure over here. I think that is, 12 meters at 4 grams per ton. So this is 350 meters from the old pit. So if you want to go and explore in this area, I'm completely sure you are going to find more high-grade gold. But it's not only Paris. We also got another prospect. This prospect is called Caruso. It's a new brand discovery. We did it at the beginning of this year. Plenty of gold over there, grades between 9 grams per ton, 10 grams per ton, 11 grams per ton. But what is really important about this prospect is shallow mineralization. We are talking about 60 meters, 70 meters, 80 meters, deep in 60 degrees. So if you transfer that in a vertical sort of direction, you will have less than 60 meters depth. And by the way, in Paris, our deepest hole is 180 meters vertical depth. So we are talking about, again, high-grade gold, but shallow mineralization. And but what is important about Triple H Caruso and Paris is that we got the potential to connect these two prospects. So at the north, we got the Triple H and Caruso prospect, and south, we got the Paris one. So between these two prospects, there is a distance of 1.5 kilometers. And in the middle of the prospects, we got historical grades with grades up to 7 and 8 grams per ton, and shallow mineralization again. So what do we believe is that there are multiple parallel structures between these prospects, and the idea is to sort of drill these parallel structures and generate a big pit potential here. And by the way, this is just two of the prospects. We got another prospect to the north that is called Observation and is 1 kilometer to the north. So if you join these three prospects full of gold, you will have a strike length of 2.5 kilometers. But what is Observation? Observation, again, full of gold, 11 grams per ton in 9 meters, 8 grams per ton in 6 meters, and 16 grams per ton in 4 meters. And what is really important, again, shallow mineralization. So we got a potential to create a big pit here, full of gold, full of high-grade gold, in the best place possible for exploring, and with a lot of money cash in bank for drilling. Finally, we got another prospect that is called Strauss. This is located to the west side of our tenements. And Strauss, we got grades between 4 and 5 grams per ton. So the industry here in Western Australia consider high-grade gold with grades between 4 to 5 and 6 grams per ton. We got that here in Strauss. So if this is high-grade, what is Paris? 11 grams per ton. What is Observation? 14 grams per ton. What is Caruso? 11 grams per ton. We got another prospects over there. So this is Pavarotti, Carreras, and Paris South. We are drilling these prospects and yeah, to try to obtain some grades over there. The idea is to keep drilling there and try to increase the size of this prospectivity within a Paris gold corridor that we call this section here. And yeah, generate a big potential. That is our dream. But yeah, so we are a gold exploration company. That is important to mention. But what else we could offer to the market? We got nickel potential as well, because we are located on the Boulder-Lefroy Fault. The Boulder-Lefroy Fault carries a lot of nickel, correct? So Western Mines in the 96, 97 drill a couple of holes in one of the tenements that we own, and in the prospect that is called Domingo. So we got grades up to 1%. 8 meters, 8 meters, 6 meters. So we did finish a ground electromagnetic survey. Now we are processing and making the interpretation of the data. And the idea is to release this information to the market as soon as possible and put a couple of calls before the end of the year. Okay, so that's what we want to do. This is the history of Torque Metals Science we listed 1 year ago. So we have had 4 drilling campaigns, totally successful. We wish the market recognize us one day. We are a serious explorer. We want to increase the sort of dimension of our prospect and our project and just keep drilling. This is a timeline that we got at the moment. So mid-November, we are going to drill up to 4 kilometers infield drilling. So plenty of good news coming for the next year in the middle of the recession. So let's see what happens with the gold. But I do humble believe that the gold is going to hit high the next year. Investment highlights. So we got 6 investment highlights. The first one is land, correct? You are in the safest country in the world, in the best country in the world. Why do you want to put money in South America, in Africa, and Europe if you are in the safest country in the world? And if you got projects like this here. The second investment highlight is high grade. How many companies have you seen with this sort of grades? 11 grams per ton, 12 grams per ton. and almost I got 3 meters in 40 grams per ton. So really crazy results, eh? The board experience. Thanks to Ian Finch and to the board experience, we got a fantastic combination with plenty of experience in the corporative sector and with a technical expertise that I'm providing to the company. Believe me, this company is going to be in the next level coming soon. For the fourth one is the capital structure. It's a really healthy company, just 80 million shares. So it's the opportunity for you guys to invest in this company. I think that this company is going to hit something good the next year, and you can join us in this journey. Please do not stand and see what is going to happen with this company. Please join us, come with us. And the only thing that I can promise you is I'm going to work bloody hard with a lot of discipline to put this company to the next level. Thank you very much for your time. After 10 minutes, I finish my presentation. Thank you. Thank you.
Cristian, thank you very much. Fantastically presented today. And I don't want to dissuade from your presentation because it was brilliant, wasn't it? Can you give him another round of applause? Kept us all very much in our seats. It was great. I didn't ask him about Ireland. I was more interested in his gold, quite frankly. There we go. Hey, we have one more presentation before we go to morning tea. And we've got a little bit of extra time. Before you all, some of you are just popping out, has anyone got I've just got a message here from Prue at our reception desk, and the hotel has asked us if we can please see if anyone in the room owns, it's a beautiful big car, it's a Ford Galaxy. Does anyone own a big old Ford Galaxy? It's a gorgeous big car, it's at reception. If it's yours, registration 1HHY437. If you can move it, it's a fabulous car. You should all just, no, you should stay here and listen to this talk, but otherwise you should pop out and have a look at it. It's one of those really old ones from like the 50s that your parents would have driven. Come on up here, sir. You are last but not least in this presentation before morning tea. This is Bruce Griffin, everyone. He's the Executive Chair of Sheffield Resources. And he's here to explain the company's recent announcement of a final investment decision. And he's looking pretty happy about it, by the way, he's smiling there. And that's in relation to their Thunderbird Mineral Sands project, which is up in the Kimberley region of our state, along with their pathway to production, which they're aiming for 2024?
Yes.
2024. Would you please welcome Bruce, everyone?
Thanks very much. You could have asked me about Ireland. I was in Belfast for a long weekend 2 weekends ago. Oh, you should have asked me about Ireland. I was in Belfast for the long weekend 2 weekends ago.
Oh, really? Why?
I live in London. I was just going for a holiday.
All right, now pause and start.
Very good. All right, thanks everyone. No, I'm keeping everyone from coffee, so I'll try and keep this brief and to the point. So I've got the same disclaimer as everyone else. We won't spend any time on that. So Sheffield Resources Mineral Sands Company, we're developing the Thunderbird Mineral Sands project in the West Kimberley, along with our joint venture partner, Yansteel. There's a lot of information here. Mineral sands won't be familiar to everyone, so I'll try and keep it simple, but there's probably 3 key messages out of today's presentation. We're fully funded, so we completed our funding package about 10 days ago. We have, with the benefit of equity from our joint venture partner, we've actually been in construction for a fair while now. So we're about 45% complete on the project. And the other message, despite being fully funded and nearly halfway through construction, we're still trading at about a 75% discount to NPV. So there's still a lot of value in this story, despite how advanced the project is. Just for location purposes, I said we're in the West Kimberley. The project's located pretty much halfway between Broome and Derby, straight off the National Highway 1. We have a 30-kilometre access road to site, but we're about 120 kilometres on the state highway from 2 ports. ASX listed, market cap moving around a little bit, but a little bit higher than that, but somewhere around $180 million at the moment. So just a bit on the project. This picture's zircon reserve, the size of the bubbles, size of the reserve and contained zircon. To the right means it's high zircon grade, and moving up the graph is high titanium grade. So what you can see from this is ours is the red bubble. It's the largest bubble on the graph. It's about 50% bigger than the next largest, which is one of the Tronox operations in South Africa. It's high grade both on zircon and titanium. It's a very simple processing. So we're making concentrates. So we're doing conventional mineral sands mining, which is dozer push. We do some gravity separation, some wet magnetic separation to make 3 concentrate products that we then will ship out of either Broome or Derby. Project's very robust economics. So there's 2 columns there for the benefit of people who have been in the stock for a while. We did a BFS back in March of this year, and then we updated the economics at FID, basically about 1.4 billion total MPV. We own half the project, so half of that is our value, mid-20s IRR. And you can see from the sensitivities, like a lot of mining projects in Australia, one of the biggest sensitivities is going to be the Aussie dollar value price of the combination of Australian dollar and commodity price. As I said, we're fully funded. We have a total capital spend, including contingency, of just under 380 million, and a total funding requirement was 484. We've funded that with 315 million of debt, basically half of which came from NAIF, the Northern Australian Infrastructure Fund, and the other half from Orion. The balance was equity. Most of the equity for the developments come from our partners. So at FID, us and Yansteel had to contribute the last $68 million, $58 million of that. Our share was 34, and we contributed that from cash. So we haven't had to do an equity raise to fund the project. We sold some non-core assets earlier this year to fund our share. Worth pointing out, of the CapEx, as of the end of September, we've already spent about $140 million of the CapEx. Our process plant's a fixed price contract. And so between what we've already spent and our fixed price contracts, we've got over 300 million of the capital cost is basically locked in and not exposed to capital cost inflation. Highlighting where we are with progress, I guess that's the point I was just making. If you look at that chart on the right-hand side, the total direct CapEx, the fixed cost component is the second bar, pretty chunky. The non-fixed price or of the non-fixed price piece, we've actually spent a little bit already. So our exposed capital is actually about the same size as our contingency and cost overrun. Within the funding facility, we have a $40 million cost overrun. So we're very well covered for even a few surprises in the execution phase. Where we are, probably a little unusual that we did a lot of construction while we were completing financing. So although we've only just made the FID decision, we've been constructing. Basically, we used the last dry season to build the road, some infrastructure works, and then we mobilised our EPC contractor to site back in April of this year, again spending the equity money that our joint venture partner contributed. So we've done a lot of the construction pre-FID. We're building from now through to the end of second half of next year, then commissioning around about this time next year, and production before the end of 23, and first shipments to customers in early 2024. I mentioned this before, discount to value, that's our share of MPV is just a shade under $700 million against a market cap of about 180, which is a very, very large discount for a company that's actually well into the execution phase. The graph on the right-hand side it's demonstrating the benefit of long life assets. This stage one of this project's a 36-year mine life. It generates a lot of cash. So what that graph shows is the MPV at the start of every year. It peaks at about 1.1 billion when we're finished executing stage 2 and expansion, and it stays above $500 million for about 24, 25 years. So you continue to see value over the very long term in these long life assets. It's a cash flows, basically the yellow being capital, and this assumes that we do the stage 2 expansion straight away, and then a very long period of significant cash generation over the life of the mine. This is said in construction, so sometimes it's useful to show pictures that we really are building it, and people wonder where the money's gone. On the left-hand side, it's an aerial shot of the process plant location. You can see water dams, the concrete footings are all in for the process plant. We're preparing the area for the power station. Right-hand side is the village. We've got a 350-bed village on site. That's enough for cover both construction and the operation phase. And more pictures. One of the biggest things we're going to build is actually the tailings storage facility. For mineral sands, most of the tailings just go back into the pit, but you first of all have to open up enough of the pit to be able to do in-pit disposal. So for about the first 5 years, we deposit the tailings on surface. It's very different to other sorts of tailings. It's basically just sand. It dewaters very well. So we'll form a big hill. And so on that, apologies, that there is the tailings dam and stormwater storage facility being built. That's about 160 hectares. So that basically will be placed there. And on the left-hand side is the scrapers digging out the stormwater pond. ESG for a lot of people. For us, probably the number one thing is the relationship with the community. The West Kimberley is an area with very high Aboriginal population. About 40% of the population are Aboriginal people, and we have a target to match that with our employment, but with a focus very much in the operations phase. With a long life asset, we have the opportunity to offer multi-generational employment, which is a much more sustainable outcome than employment during construction. For those who don't know mineral sands, I won't spend very much time on it, but mineral sands, think of them as late stage commodities. The consumption's driven largely by consumers rather than industrial users. So there's two main products. You have titanium minerals and zircon. Titanium minerals are used in paint, plastics and paper, and they're basically what make these products able to hide, it's what makes paint non-transparent effectively. Zircon is also primarily used as an opacifier for ceramics. So if you think about things like basins, it's what makes it nice and shiny and white. There's also some industrial applications for zircon. Supply and demand dynamics. The one on the left-hand side is sulfate ilmenite. Probably the most interesting thing on that graph is you can't see the COVID dip. It's one of the only commodities I know where demand in 2020 was actually higher than 2019. The market never there was a pullback in the first half of the year, and the market came back so hard in the second half that we basically saw growth in 2020. Zircon, we saw more of a COVID dip. The medium-term fundamentals for zircon are very solid. The three main producers are all either at near end of mine life, so Valiukas with Jacinth Ambrosia in South Australia, and the other main producers are Tronox and Rio at Richards Bay. Those assets are struggling to maintain their throughput, and Jacinth Ambrosia will close before the end of the decade. So we're seeing a pullback in supply from the main producers and a lack of new projects to fill that gap. So it's very much a supply-driven price story. In terms of pricing, because probably most people don't follow these, I didn't just conveniently cut the graph off before prices dropped. We've seen prices continue to grow through 2022. And for the first time in Q3, and now prices are now leveling off, but they've leveled off at record high levels. And we're starting for the first time to see a little bit of decline in prices, but there's been very little overbuild, and there's no inventory. So the conditions are not in place for a rapid decline in price. So in summary, as I said at the start, there's probably only three things to really know. Fully funded, construction 45% complete, and we're trading at a deep value to our share of the NPV of the project. Thank you.
Thank you very much, Bruce. What did you do when you were in Ireland? Did you get up to much?
Yeah, a little bit.
Okay.
The Giants Causeway and so on.
All right, we can come have a chat with you about that. After this break, it's pretty jam-packed. We've got lithium, copper, gold, uranium, and I've got a couple of words. Gallen Lithium, trading halt, big announcement. Why didn't they present yesterday? They've frozen everything this morning. So they had pre-open. They asked the stock exchange for a little freezing of everything until they make the announcement or Monday. Imagine if they'd talked yesterday. I'm a bit frustrated now, so I'm going to go out and find JP and have a little word with him. But he's going to be talking to us after the break. Gallen Lithium.